Folks, welcome to the Midweek Roundtable. I have my usual co-host, 𝗧𝗴𝗀 here. My name is 𝗧𝗴𝗀. I'm the Senior Strategist of 𝗧𝗴𝗀, and Jeff is the Senior Strategist for Joy of the Trade. We're here. Jeff, welcome. We do this weekly so that you guys can get the best understanding of the market action that's happening right now. So, Jeff, how are you today, by the way? I should start
doing well,
there.
Roger. Nice
you look great.
I love the blue background. I like the blue. You're bringing out all the blue. I like it. Blue
Thank
shirt
you.
Works for you. It's working.
I appreciate it. So what do you think of, I got to start off with Yellen. I mean, we got to start off with the obvious. She just couldn't help herself. She couldn't help herself, right? We talked about this. Listen,
this is the thing. I tell my kids this all the time. I love talking daddy stuff, but I tell my kids, never lie. Besides just the morals of it, it's so much easier to tell the truth. You can remember the truth. You don't have to tell lies. And these Fed people, these Treasury people, they're lying to the public all the time. Oh, there's no inflation. Don't worry about it. Don't worry about it. Every now and then the truth's going to just find its way out by accident. And that's what happened with Yellen. And she was like, oh shit, this thing might go crazy. We might have to see rates move higher because the economy's going nuts. And that's actual reality. So that slipped out. And the market took a 2% dirt nap, and she had to come back out and say, oh, I didn't mean it like that. Oh my God.
Yes, she did. Yes, she did. She meant it. She meant it like that. She meant exactly what she said. Oh, when she said that, I was like, oh my God, here it comes. She couldn't help herself, Jeff.
But this is the thing. It's going to keep seeping out. Things like this are going to happen because you know what, Roger? And we've been on this, and you've been 100% hammering this. Inflation is going to go bonkers. It's not just going to go; it's going to explode. And I was a little bit, and I have an interesting thing. I'm going to pivot to something interesting. I've changed on an asset class. I've had a flip flop, and as traders, you should do that when things change and technicals change. I've become bullish on oil drilling stocks because oil's moved because oil has gotten dragged up with the hard asset commodity. This inflation thing is so powerful and it's so insane. And we've seen corn up 50% this year, and we've seen soybeans up 50%, and oil now above 65. I'm not as I don't think oil is going to go to 100 or anything, but if you look at the 𝗧𝗴𝗀 and you look at some of these stocks like Baker Hughes and 𝗧𝗴𝗀, these are oil exploration companies. The last time oil was above $65 a barrel, these stocks were 30% higher than where they are now. So if you sustain this move, if you stay in the 60s, if this is a new consolidation range for oil, I think those stocks could rip.
Let me ask you this. Very interesting that you've changed that you flip-flop, because you and I have been very, very consistent on oil. So let me ask you this. Yeah. It's okay to, hey, listen, you can't hold positions. We've been on the same train for over a year now.
Right.
Things do change.
Yeah,
so interesting question for you. I'm not looking at the charts right now, obviously, since I'm talking to you. Are any of those drillers trading above last February's high, or are they still below that level?
They're below, and oil's above. And I know you like to see taking out healthy, more of a healthy technical thing.
Yeah.
But I would say this. When you're looking at oil stocks, they're different because they're so tightly tethered to crude. They're so tightly tethered to an underlying derivative asset that it's different than let's say a Microsoft or something that's breaking down technically, because those assets tend to mean revert, and they tend to retighten over a period of time, correlation between them. And so I think if oil stays stuck, I think you're going to see this elevator back up in some of those stocks per se. I'm more bullish on the stocks, the drilling stocks in particular, than I am on crude.
Yeah. No. That makes more sense. If it always, when the energy market comes back up, you start seeing the drillers start.
It's investors are saying, is this move real? Let's give it a little while. And the longer it stays up here, and to use Jay Powell's, it's all transitory inflation. The more it becomes obvious that none of this shit is transitory, this is what it is, then people are going to freak out and say, oh my gosh, at $65 a barrel, 𝗧𝗴𝗀𝗃 can make a tremendous amount of money. PXD, Pioneer, is a big fracking company in
Yeah.
Texas. They can make a tremendous amount of money at $65 a barrel because their pain point is like 50. You
Right.
go below 50, they start losing money. You know,
Right.
I mean,
Yeah,
just educational to people.
We've been all over that for God knows how long. We've been talking about that when they were losing money last summer.
I don't know. And again, I'm not like talking like long-term investment, because my long-term thesis is still the same that we've discussed, that like traditional energy is going to be bad. And
Yeah.
I'm in it for a rental, for a flip, for like this quick 2 month, like boom. And then,
so you think over the next quarter, say?
Yeah.
Over the next quarter. Okay.
But I wouldn't be like a multi-year investor.
Okay, good to know.
To be clean and clear about it.
Right. No. This is very good, because, when you're talking about quick can be 3 days, quick can be a year. So this is a good understand. That's why I always say quarter to quarter. I always like to do things by the quarter. It makes it clean.
I look at days. I look at trades in terms of hours, days, to like up to maximum a quarter. I'll trade it. I don't really but I have like my secular opinion on investments and stuff. But like from trading, I don't really go beyond the quarter.
Well, what I usually do is when I give analysis, I'll tell people this is a position trade, meaning it can go up for foreseeable future, meaning 2 quarters, 3 quarters, or I'll say this is a short-term trade, and then I'll say weeks or up to a quarter. And you're right, it's almost impossible to predict short-term price action beyond a quarter.
Well, let me segue on that point. There's a person that we like to talk about behind the scenes on our little Slack convos, and that's Cathie Wood. What do you think about what she does? What do you think about those stocks in her ARK portfolio?
Well,
what do you think her impact is on the market? Because for me, it's fascinating.
It is very fascinating. And I'm going to tell you, I always think about her in the background, and I'm thinking she's either very, very ballsy, or she's like a complete, it's one or the other. It's either she's brilliant or she's crazy, right? Because there's no in between with her. It's all or nothing, because she's picking stocks that are, okay, she's completely, all right. So let me, I got a lot to say about her. So she's completely violating every tradition.
Good word.
She's violating
She's
violating every tradition. Yeah, she's not diversifying crap. She's picking stocks that have way too much volatility and risk. Basically, quite honestly, I don't know. I think it's going to end up really, really well, or it's going to end up being really, really bad.
So I think you're so spot on. And this is my thing about her. So she's like, for me, she's like this super intelligent woman that's a really great fundamental analyst, right? And she has a very good knack for identifying long-term trends. So she's like she'd be an excellent private equity manager or somebody, or a venture capitalist, because she's kind of like, she's a visionary in a way. But I would say she's probably the worst tactical stock trading fund manager I've ever seen in my life. And what she's doing with her ETF is going to lead to a freaking disaster in the stock market, I think. The fact that she is in all these high growth, high beta tech names, when the Nasdaq's up, like 7-8% this year.
She's a genius.
She's down 6% in tech stocks this year, while these like the broader index is up 7%. What she's doing is she's going out, like you said, and violating a lot of things. And what she's really trying to do, and she's terrible at, is be a market timer. Because the way the ETFs work is money is always flowing into ETFs every day. Like I have this monthly money flow product that this service where we try to piggyback those institutional flows. And we've talked, you helped me with that, design that, you helped me with the introduction to that program. And, the tea leaves are there because there's a way they do it. There's a way it should be done, but she violates that because she tries to go in, instead of like having the flow, like consistently just go all month. She'll be like, all right, give me 2 million Tesla shares right here, right now. Or I want Twitter right now, boom. And then it's like another 15%. And she buys like the whole block in like one block. So for like professional like guys that work on the big desks at Merrill and Goldman, and I know all these guys, they love Cathie Wood because she's so bad at pricing blocks
right
in the moment. And I think invariably she's been underperforming while her fund has been having a flow of capital coming into it. So if you look at the ARK fund, for instance, it went from 140 million shares to 190 million shares this year. And the fund is down. What's going to happen when people look at their, they open up like traditional mom and pop, they got like a nice little diversified group of ETFs, and they're like, what's this ARK you guys put me in at Morgan Stanley? Why am I down 10% when the market's up 10%? Sell that thing. That's going to happen in a big way, all at the same time. And she's going to put pressure on these names just to puke her $25 billion fund, in my opinion.
And to add, I couldn't agree with everything you're saying even more. There's absolutely nothing that you've said that's not 100% accurate. What I wanted to add to that, and I think this is really interesting. Investor, like if you're looking at the market, if you and I are analyzing fund managers over a period of, let's say, a month, right? Let's say you and I are, and this is one of the reasons why she was in all the magazines and all the newspapers 2 quarters ago, when the stay-at-home stocks that she was picking were going crazy.
Yeah.
Oh, ARK is up 50% while the market's up 3%. And the reason that was is because they don't get a chance to really look at risk-adjusted returns. and when you look at her risk-adjusted returns, when you consider her volatility, Jeff, in comparison to the gains, it's probably the most awful number that you would ever see in your life. Her MAR ratio is probably 0.10, right? because think about the volatility.
I know, you're right. Yeah. She takes on so much risk. The moves against her are so wild. Yeah.
So until you see a few quarters of that, which we're getting to, you're not going to get a real apples to apples idea of what she's doing. And then when you do, and that's coming right now, you're going to see exactly what you're talking about.
But the problem, Roger, the problem, in my opinion, is she's massive, right? She's got a big fund, and we just saw this guy that blew up, and he had this, he almost blew up Credit Suisse. Like, this bank's been around since the Royals were ruling
forever,
right? And this guy had concentrated bets, and he almost blew up a bank with his concentrated bets. And I think you're going to see more and more of that. And it pays to be diversified. It pays to be a market timer. You got to be one or the other. You have to be a market timer, and you have to be nimble, or you have to be very, I'd say just be very longer term and consistent, just flowing money into the market.
And before we jump off this issue and move into the next issue, I just wanted to add another thing that you're spot on right now. A lot of the stocks that she's picking, and they're really good in terms of long term. What they are. I love the stocks she picked. I love them. But again,
you got a great opportunity in these names. There's going to be a fire sale when she has to puke her fund.
Yeah. Again, everything is great, but timing. You got to match it. But here's the thing, and you nailed it just now, kind of indirectly. A lot of the stocks that she's picking, because they're really good companies, they're not saturated companies. They're smaller companies. She was big on TDOC. She's big on a lot of the Russell stocks. Well, those stocks don't have the capitalization of even the stocks that where I'm going with this. There's not a lot of liquidity there, so it can be a real massive when it can
be magnified. Her effect when selling those will be magnified.
Right. So that's the other factor, which
we're still in a good way in the market. We're still the market's going up. She's getting money into her fund, and she's still getting murdered. What's going to happen if things get rocky, volatile, a tad more bearish? VIX doubles or something. VIX goes to 20.
She's not following my momentum. She's not following my momentum levels, Jeff. Let's put it that way.
This is the thing. If you're a momentum person and you're a growth momentum person, even different, and your charts start to break down, look out. You could take a pain train you never thought was possible.
So listen to this. This is some real numbers for you. I follow stocks making 90-day breakouts and 90-day breakdowns, okay? 3 days ago, about 300 stocks were making 90-day breakouts, okay? 3 were making 90-day breakdowns.
That's it, yeah.
Wait. That was 2 days ago. Yesterday, or Friday, that was Monday. Yesterday, Tuesday, 30 stocks were making 90-day breakdowns. Today, 78 stocks are making 90-day breakdowns. Monday, 3, today, 70-something.
I love that. Underneath the hood, there's a lot more fractured market price. There's a lot of stuff 25% off their highs, 20% off their highs. A lot of stuff is beat down. A lot of stuff. But you can't tell that by just looking at CNBC. No. And interestingly, the stocks that are breaking down, and I mean really breaking down, 90-day breakdowns, quarter breakdowns,
Peloton, Zoom, Splunk, every stock that was making all-time highs, every stock that that Russell was in last 90-day breakdowns, Citrix, all of them, you name it, they're all breaking down right now. And I think it's going to continue. We need that shakeout. We need to have that shakeout.
Yeah, it'll be good. I mean, we're going to have, you're still going to have 𝗧𝗴𝗀𝗀 with 120 billion minimum every month. Money got to go somewhere. But things get stretched, they correct, they offer opportunity, we buy them, we deliver the bag a couple of months later. Thank you very much for the trade. Move on to the next trade. That's the beauty of being a trader. You want action. We want action.
Right. So
we don't want bear. Like, people get it twisted. They're like, are you a bear? And I'm like, not at all. Not at all. I buy like 80% of the time.
Sure.
Always skewed to the long side. Even like with my monthly money flows, I'm like, we've got monthly money flow elite. We get 3 shorts, 6 longs.
Right.
And most of the time it's 7 longs and 2 shorts. And it's like always skewed long because that's just the nature of life in the market.
Right.
But you got to time these things. And, as an active trader, it's not that I want bearishness. I just want adequate volatility. I don't want suppressed volatility. Suppressed volatility with small range bars and small moves is like my worst thing. Like when the market just goes up like 20 basis points a day, terrible.
Let me ask you this, Jeff. Right now, well, no. I hear you. Let me ask you this. What our earnings are? We're now reaching the second half of earnings. Tech and financial have been just crazy good. We talked about that. That was not a surprise. That was anticipated. Right. I mean, God knows they've been beaten down for the last year. What are some sectors that you're seeing over the next summer's coming? Reopening is here. Bahamas just announced on the first of the month of this month that they don't need any more vaccine to go there, by the way, which I think is really cool since I'm heading out there again with the family. I had a really good time. I was working, but I had a really good time, and I want one thing
that I've seen that's interesting, like one sector that's kind of, I thought should be doing better on the back of like a lot of this reopening would be the airlines. But if you look at some of the moves like Delta and some of these stocks have made recently, they're starting to break down underneath the moving average also. So I think you need to see like a significant oomph from the reopening this summer. And I'm still talking to people that are just, like, I just got my second shot because I'm pragmatic. I don't think, like, I'm in the middle. I didn't think the shot could hurt me. I'd rather be vaccinated than not vaccinated.
Good for you.
But I also want like the world to be open too, because I think like, it's an isolated group of people that we need to protect. And I'm very like even-minded about this whole thing. But I talked to some people on the edges of the mentality, right? You got the yahoos that are just like, whatever, man, like it's nothing. Okay, don't listen to them. Then you got the 15% on the other side that are like, I'm fully vaccinated, but I still wouldn't eat in a restaurant indoors. And for me, that psychology is fascinating. There are people that are so affected, I guess is the right word to use, so affected by what we've all just been through collectively.
Sure.
That it's going to take a long time.
PTSD, man. Society PTSD.
The societal PTSD is very real. And though a lot of people are vaccinated, there's a pretty considerable group of people for whom that vaccination is not a passport to live the same life they used to live.
Interestingly, that you've seen these. I have not seen those yet. But you live in Miami. It's a denser. You have real popular. The people that I've been seeing are a different group, Jeff. The people I've been meeting, and a lot of people, they're not anti-vaccine, but they're cautious about the vaccine. They don't think that the government is going to putting in monitoring, none of that stuff, no conspiracy theories. They're just concerned that the government came out with it so fast that the companies were rushed, that they kind of want to see how the side effects and all that's going to go for the next couple of months before getting it. I may not agree, but I understand that. That kind of makes more sense than I'm not going to do it because Bill Gates is going to monitor everything I do 24. I mean, that's ridiculous in my opinion.
That's preposterous.
That's preposterous. So again, it's funny even thinking about it. So that's the people that I'm seeing here. But it's interesting. But you're absolutely right. It is going to take a while for things. Yeah.
So I think that they're hoping that I think there's like this big hope that all of a sudden, like like all these companies, this is great. I mean, like JP Morgan and Goldman Sachs, and them are like, we're going to summon all our employees back to the office. Like you can't stay home anymore.
Yeah.
by this summer. You got to show up at the
and
desk.
Walmart is doing similar. A couple of other, a lot of the bigger companies are doing that. But
the business travel is a big part of the entire, complex of the travel industry. And I still don't see that like ramping back up yet. I mean, I'd love to like it's coming back, but it's not like exploding back.
No, I think it's going to take I think we're not going to see a big rush there till after the summer.
Yeah.
I think it's going to be, but again, sentiment is changing. I mean, those stocks are not making 52-week lows, but yeah, they're not running to 52-week highs either. No,
I think there's going to be an inflection point in the reflation trade on the upside. Yeah. It's going to capitulate, and then you're going to get like a bubble burst for a little while, and then it'll go back to trending higher. But I think like that's why like I'm starting to see that oil started to like break up. Like all these commodities are white hot. Fed doesn't care. They don't care. But this massive dislocations and everything, like you can't get chicken chopped up fast enough to satisfy Popeye's chicken sandwich cravings.
Right.
Like, right. This economy is so distorted across the board.
Any specific stocks that you're looking at? Any very close sectors that you're eyeing right now?
I mean, I mentioned oil. That's probably the one that I'm the most interested in on the short-term basis. I'm still very bullish on banks. XLF, they had awesome earnings. They got through the other side of it. Yields look like they did what they were going to do on the downside for the most part. It's consolidating, but I think next move, big move, 20, 25, 30 basis point move is going to be back to the upside, which would be tremendous for the banks.
What do you think about, and I know a lot of our guys, our followers are looking for answers here. What do you think about solar and EV stocks right now over the next quarter?
Ooh, EV.
Basically the Russell 2000.
Yeah, I'm neutral. I'm sorry to not get to give you a half-baked answer. I think they've gotten killed and they're going to rally, and the secular trend towards them is going to still exist, and you'll be happy to own them in 2 or 3 years. But, if they're getting hit like this when the market is still hot, what's going to happen when the market gets cool?
And also,
they're not defensive names.
No,
they're not counter-cyclical.
No. I'm also getting neutral because I believe that the Russell has ran up 85% in the last 12 months. So it's so much hotter than everything else. So I think it could be kind of consolidating and pulling back.
Yeah.
Before I let you go, I always ask my last question to you is always any specific pair trades you want to talk about? Anything you closed recently? Anything you're?
It's still like I'm looking to pull the trigger on a new one. I'd say join and see. There'll be one hopefully in a couple of days. Today's the first day of the monthly money flow trades. So
good.
I've got some cool names in there where I see some action percolating. I've seen some retailers catching a bid, which is interesting.
That's my hot sector right now. I'm very bullish on Levi's, Gap, L Brands, and Under Armour.
Nice.
Which are all doing really, really good. Those are all bucking the trend. Yeah, L Brands, Gap, Under Armour, and one more that I mentioned. But yeah, those
Gap,
retailers.
You said?
Yeah, Gap.
Gap's one of the stocks. Gap's one of the
there you go.
Stocks.
Yeah, the stocks were Gap, L Brand. What is it? There was 3 or 4 of them. Gap, L Brand,
it's kind of funny how we have like a little bit of a different process, but we end up in the same trades a lot of times. Have you noticed that?
Of course, because we're trained to see market strength, weakness the same way. Of course, very, 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 very typical. Listen, Jeff, this was a great session. I appreciate your time. I know you're a very busy guy. Folks, if you're interested in communicating with Jeff, reaching out, commenting, giving feedback, anything, good or bad, we have thick skin. Just share comments with us. Reach out to Jeff at 𝗧𝗴𝗀@joyofthetrade.com. That's Jeff@joyofthetrade.com. If you want to reach out to me, the best way is support at marketgeeks.com. It'll get very quickly to me and it'll bypass 5 or 6 different people. Anyhow, we had a great session. Please, please, please follow us and join us here at Wealth Press. Jeff, I had a great session and thank you for joining me.
Likewise.
Have a great day.
Thanks, Roger. Have a great day.
I'll see you next week. Bye.
I'll be here.